The global economy is reeling. Former President Trump, once again at the helm of the United States, has ignited a new trade war with China. The weapon of choice, tariffs. On April 9, 2025, the Trump administration announced a staggering 104% tariff on a vast array of Chinese imports. This aggressive move has sent shockwaves through international markets, raising fears of a protracted and damaging trade conflict. The immediate impact was swift and severe. Stock markets around the world tumbled. The S&P 500 plunged, edging closer to bear market territory. Asian markets, from Tokyo to Hong Kong, braced for the ripple effects. Currencies fluctuated wildly. The US dollar faltered, while the Japanese yen and Chinese yuan experienced volatility. The world held its breath, uncertain of the full ramifications of this audacious move. This is not the first time the US and China have engaged in a trade war. The Trump administration had previously imposed tariffs on Chinese goods during his first tenure. However, the current tariffs are significantly higher and broader in scope. They signal a return to protectionist policies and a willingness to disrupt global trade flows. The situation is fluid and unpredictable. The stakes are high, not just for the US and China, but for the entire world. The outcome of this trade war will have far-reaching consequences for businesses, consumers, and the global economy as a whole. The Trump administration argues that these tariffs are necessary to protect American jobs and businesses. They claim that China has engaged in unfair trade practices for years, including intellectual property theft and currency manipulation. By imposing these tariffs, the administration aims to level the playing field and force China to change its ways. The administration points to the trade deficit between the US and China as evidence of this imbalance. They believe that by making Chinese goods more expensive, American consumers will buy more domestic products, thus boosting the US economy. Furthermore, they argue that these tariffs will incentivize American companies to bring manufacturing jobs back to the United States. Critics, however, argue that these tariffs are counterproductive and will ultimately harm the American economy. They point out that tariffs are essentially a tax on American consumers, who will have to pay higher prices for everyday goods. This, they argue, will disproportionately impact lower-income households. Moreover, critics argue that these tariffs will disrupt global supply chains, raise costs for businesses, and stifle economic growth. They fear that these tariffs could spark a trade war, with China retaliating with tariffs of its own, leading to a downward spiral in global trade. The impact of these tariffs is already being felt across a wide range of industries. Electronics, steel, and pharmaceuticals are among the sectors hardest hit. These industries rely heavily on Chinese imports, and the tariffs have made their products significantly more expensive. The electronics industry in particular is bracing for a major shock. China is the world's largest producer of electronics, and many American companies rely on Chinese factories to manufacture their products. The tariffs are expected to drive up the cost of smartphones, computers, and other electronic devices. The steel industry, which had been recovering after years of decline, is also facing renewed uncertainty. The tariffs have made imported steel more expensive, giving domestic producers an advantage. However, they have also raised concerns about potential shortages and price spikes. The pharmaceutical industry is grappling with the implications of the tariffs on both raw materials and finished drugs. China is a major supplier of active pharmaceutical ingredients, and the tariffs could lead to higher drug prices for American consumers. The Trump administration has indicated its intention to encourage domestic pharmaceutical production, but it remains to be seen whether this will offset the impact of the tariffs. Section 4. China's retaliatory arsenal, a trade war on multiple fronts. China has vowed to retaliate against the US tariffs, setting the stage for a tit-for-tat trade war. While the specifics of China's response remain unclear, they have a range of options at their disposal. One likely target is American agricultural products. China is a major importer of soybeans, pork, and other agricultural goods from the United States. By imposing tariffs on these products, China could inflict significant damage on American farmers, a key constituency of President Trump. Another potential area of retaliation is restrictions on American companies operating in China. China could make it more difficult for American companies to do business in China by delaying approvals, increasing inspections, or launching investigations. This would hurt American businesses and could lead to job losses in the United States. China could also choose to target specific industries or companies that are seen as vulnerable or politically sensitive. For example, they could target companies that have been critical of China or that operate in industries that are important to the Chinese economy. Section 5. Navigating the storm advice for a turbulent global economy. The reignition of the trade war between the United States and China has created a climate of uncertainty and volatility in the global economy. Businesses, investors, and consumers are all left wondering how to navigate this turbulent landscape. For businesses, the key is to be agile and adaptable. Companies with global supply chains need to assess their exposure to the tariffs and develop contingency plans. This could involve diversifying their sourcing, relocating production, or adjusting their pricing strategies. Investors are advised to proceed with caution. The stock market is likely to remain volatile in the near term as the trade war plays out. It is essential to stay informed about developments and to consult with financial advisors before making any investment decisions. Consumers may see higher prices for a wide range of goods, from electronics to clothing to food. It is advisable to shop around for the best deals and to consider delaying major purchases if possible. The global economy faces a period of uncertainty as the trade war between the US and China escalates. The consequences of this conflict will be felt far and wide, impacting businesses, investors, and consumers alike. The situation remains fluid, and its ultimate resolution is uncertain. However, by understanding the dynamics at play and taking proactive steps to mitigate risk, stakeholders can navigate this challenging environment and position themselves for a future shaped by the shifting tides of global trade.